Hey, everyone. Just got back. It's earnings season. Yo, what's up, traders? Any of you make money on Meta? Safe Moon. Let's go! Pretty good guidance. Man, Reality Labs is just sucking wind. $13 billion loss. Facebook MAU's flat. All right, well, the call starts in like half an hour, so. Numbers are cooked. I don't know about that. What's up, Andre? Yeah, I think the big thing in the release is probably this Q1 guidance, which is all the way up to 28.5, which means they're usually pretty conservative. So that means they could actually see Facebook return to revenue growth, which would be great and not what most people are thinking. We'll have to hear what Mark says. Make sure you watch my Project Veritas reaction video. Steve Wolfram.
Have to sort of break away from it. So anyway, that's a little bit about, now in terms of, you try and hire somebody. They say, we'll only come if you give us X. You have to kind of figure out, is that reasonable or not? If you don't feel comfortable with it, it's one thing about, well, can I get away with less? Yeah, don't do that. In other words, for me at least, my theory of these things is there's typically a fair and reasonable number. Yes, you might be able to get away with less, but it's probably not going to end well. It's better to just go with what you think is the sort of fair and reasonable number. Now, if the person says, no, I want twice that much, etc., and you don't think that's the fair and reasonable number, again, that's not going to end well. You might say, oh, okay, I'll give you twice as much because I really, really want you. As I say, my experience is that doesn't tend to end well. There's always exceptions to these things. There are some cases, actually, no, I pretty much, when I think it's really outside the bounds, it's like, of what I think is reasonable, it's like, no, I'm not going to do it. Even if it might be the expedient thing to do.
Really cool.
So what percentages and so on people should get. There's always looking at other people's companies and seeing how those have worked is a reasonable place to start. I think Yeah, I mean that's probably the best place to start. I mean, I think by now I have no idea. I mean, I haven't
This
been in
guy
this
is like
business
such a genius,
so much
such a
in
genius, and
recent
such a
years.
legend. But this guy Hassan Abi has 40,000 people watching him.
Okay? Bananas. Like,
He's talking about bananas.
why are people so comfortable being like, no, actually, fuck you, I'm a piece of shit? And then other people are just like glazing him up. They're like, yeah, King, be a piece of shit. Yeah.
He's just loud. This guy's smart.
Tech stars and all these other things have become. And for some reason, I'm blanking on the generic term for these things, but a sort of a company launching entity. It's kind of the modern version of business school, I suppose. But I remember when Y Combinator was just starting, I knew the chap Paul Graham who started it, and I went to a bunch of its events and so on. I remember they had a kind of a day in Boston where they had kind of the Y Combinator University, where people were talking about sort of how to start companies and so on. And I remember these kind of that was, I mean, it's a long time ago now, but was sort of the early period when people were starting to say, and there's this thing, this thing, this thing. And I found it very amusing that all these things that had sort of emerged as lingo, in sort of almost slang lingo, in the startup companies around Y Combinator and things like that. Oh yeah, somebody's pointing out accelerator is the term. Yes, sorry, I blanked on that. I think these things that have been like the demo day. I went to the first Y Combinator demo day, which I'm sure Paul Graham just named that because it was kind of like, well, we got to name it something. Let's call it that. And now that becomes a standard term and so on. It's kind of always kind of fun to see how these things originate and then become standardized. But so I'm sure there are written down rules of thumb for, you give this amount to this person, this to this person, and so on. That I suppose helps set expectations. Let's see. Okay, Offlam is asking, how do you research a company you're interested in working for or purchasing? I haven't bought very many companies. I bought a few, but not many. I think that's a different thing from a company that you are thinking of working for. I think that requires a company you're buying.
Sorry, I had to get McDonald's.
It depends what you're buying it for. Are you buying it for the people? Are you buying it for technology?
You trolling Steve Wolfram? Don't do that.
Companies and the acquisition of companies, it's a difficult thing. There are certainly companies that simply aggregate many companies together with a small amount of kind of shared resource, sort of economy of scale. And that's probably a more straightforward case, not something I've done. When you are acquiring a company and really want to integrate the stuff it has into your company.
I'm sure he knows about this stuff.
That's a lot of work. It's complicated, and and sometimes if the culture of the company you're acquiring doesn't match well your culture as a company, it really is never going to work. Maybe you can maintain it more in the sort of aggregate of companies model where it's its own separate thing, and you've never really integrated it. But as something to integrate, it can be very challenging. In terms of researching companies to work at, well, let's see. I mean, it's like understand their products, understand. I don't think watch videos of. It depends on the size of the company. Whether is it a company where you're going to be interacting with the CEO? Is it a company where you're 8 levels down from the CEO, what scale of company. The goal is to understand something about sort of the culture of the company, and you can often get that if you meet people who work at the company and things. You can get some sense of it, although it isn't completely uniform across, for example, different parts of a company, different kinds of work that are done at the company. I'm not sure. I think you can probably get some knowledge from sort of talking to people. I kind of watch videos of relevant people at the company giving presentations. I suppose for a company like ours in particular, it's particularly easy because we do things like live streaming internal design review meetings and things. So you want to know what happens at the company, what it's like. It's like watch a live stream of what actually happens. It's simple. I believe we're kind of the only company that does that. But that if you can get some proxy for that, that's a good way, of seeing sort of what is it like inside the company. And different companies are very different. I mean, different companies range from, the company is very much of a think for yourself. People will be pleased if you think for yourself, to very regimented, to very kind of, manager pleasing is the most important thing, to productivity is the most
Manager
important
pleasing,
thing.
that means please me.
To, very sort of having, for example, a lot of imposed sort of real world culture as well as corporate culture of, there are, like, our company tends to take the point of view that sort of the, people have their own personal views, whether they're, about political, social, whatever issues, and that's their business and it's not the company's business. Not all companies take that point of view. Some companies are very much more kind of involved with kind of sort of external causes and things.
Oh man, you're answering that question too long. Answer my question now.
Independent in a way that I tend to think that it's a healthier situation, that people have whatever views and activities and so on they have as individuals, and what we do as a company is just the things we do in making our products and things like that, and those things should be separated, but that's not always the case. And some people like to have a company where the internal culture has more kind of involvement with sort of external issues and so on, and different from our company, for example. And I think so. There are all these different parameters of kind of what a company is like. You can go look on, what is it, Glassdoor and things like that.
Man, you're filibustering, man. Come on.
To the horror of our HR department, I've taken the point of view that I want to be the worst rated CEO on Glassdoor. So whatever I'm doing that, I don't. In other words, I think it's all nonsense and I don't care. And I object very much to all these pieces of mail that you get from companies like that say, don't you want to improve your ratings on one of these sites? Just work with us and we'll improve your ratings. And it's like, wait a minute, this was supposed to be an independent, just people being, getting independent opinions now. And who knows what's going to happen in the post-ChatGPT world of all kinds of eloquent pieces written by supposed people at companies. So I have no idea whether that stuff is accurate at all. I've made a point of not really looking at it, and I think it's I think
I too ignore feedback.
I don't know whether that gives you a reasonable insight into the culture of a company or not. I would say that perhaps, if I were to guess, deep inside a giant essay, you might be able to deduce two things. Number one, what was the orientation of the person who wrote the essay? Were they making sense, or would they have some bizarre axe to grind? And number two, what is really actually going on at this company? Because by the time you've written a giant essay, you're either, mostly venting about some personal issue of yours, or somewhere in the middle of that is actual content, my guess. Those are a few things to say about, sometimes with companies, there are things where, oh, I don't know, you can, I'm trying to think what, if there's a company with a physical location, going to visit the physical location is really useful to get some sense of the company. It's funny because I've been an advisor to many companies, and I usually only meet the CEO, and sometimes I'll visit the companies, though that's comparatively rare. And it's very interesting because what you know about the employees of the company is only through the CEO, typically, if you're in that kind of role. And it's always interesting to me, sometime later perhaps I'll meet some person who was an employee, even a fairly senior employee at such a company. And it's always interesting to kind of make
For Meta, I think that they don't have anything else to do with the cash. They have to do a buyback.
Link together one's view of what was going on from the CEO with one's view from the individual data from individual people at the company. And I have to say, my general experience is you actually get a much more accurate view, sort of secondhand through the CEO, than you do by talking to individual people at the company. And just my observation about these things, that usually the CEO, there's a certain sort of projection of personality that happens from at least stronger CEOs, founding CEOs particularly in companies, and it's then the kind of the view of sort of what's happening within the company of all the different pieces. It usually is better organized talking to the CEO than you learn from the individual sort of point samples, which is, I suppose, to say that it's probably if you want to know about a company, watch videos of the CEO. Although, I will say that sometimes that's not accurate, because there are certainly people who have a particular kind of public persona that's different. Although I don't know, I'm thinking of examples here, and it's not as different as one might think. I mean, it's somehow the personality does come through, and maybe you have to think a little bit to see it, but it is still there. Let's see, maybe one more thing, and then I need to. Okay, this is a question from Kelly here. You said you understand French. Are there other languages I'm familiar with? What other languages would you like to learn or wish you'd learnt? I learned Latin and Greek when I was a kid. Those have turned out to be useful to me. I never thought they would be when I was a kid. I made a huge fuss about learning them and said, these are never going to be useful to me. But actually, they've been useful so many times. I mean, my gosh. If you deal with an old field like medicine, for example, where there's all this terminology, where somebody says, oh, it's a whatever, whatever, whatever. And it's like, I can tell what that means. I know those Greek words, or I know those Latin words, and you immediately know what it means. And that's helpful. I think also in the particular things I've been interested in, some history of science, it's sort of useful to be able to pick my way through Latin particularly. Although unfortunately Latin evolved quite a bit between the classical period, which is what one learns in school, and more modern times. Latin is also an interesting language because it's a simple language. Its grammar is quite simple compared to, for example, English. And it is the case for me, and probably for many other people. I learned Latin grammar. I couldn't tell you English grammar. I couldn't tell you the names of all the tenses in English, for example, for verbs, whereas I could in Latin. There are a lot fewer in Latin. It's a lot simpler. I think I always thought when I was a kid that I was pretty crummy at learning languages. I don't know if that's really true. I think that it was a feature that some people who are, oh, we're going to learn French. Let's go hang out in France for a little while, and then you'd learn French. Well, I never did the hang out in France part, so it didn't. That made it proportionally much more difficult to know French. I wasn't that motivated. Otherwise, I probably would have done that. But I think I learnt many computer languages back in the day. Haven't been learning them so much recently. When I first started designing languages, I kind of knew, it was late 1970s, early 1980s, I kind of knew at some level all the languages, but I typically knew them rather theoretically. I didn't actually program in them. I mostly knew them by, these are the design principles that they have. I would say in more recent times, I don't know what the value of knowing languages is going to be, because these translation mechanisms are getting better and better, and I haven't yet had the experience of having a conversation through video conferencing or something where I'm speaking in English and somebody else is speaking some completely different language. But that's certainly coming. I mean, there certainly are test systems that do that. And when that's happened, I'm not sure what the value of knowing these other languages is going to be. I mean, I'm fortunate that English happens to be my first language. And so, and that happens to be the sort of the current de facto international language. I think that in terms of other languages, it is interesting to see how different the thinking is in other languages, but that's a thing that is more than just learning the language. That's kind of embedding in the culture that goes around that language. And that's something that is a big investment to do. And I've certainly not done that and not been highly motivated to do that. In terms of, I have been curious actually, okay, so I was learning a language just recently. I'm interested in constructed languages, and in particular, there's a language called Toki Pona, which is a kind of a pidgin language. So, pidgin language is kind of a language. Pigeons are usually languages, P-I-D-G-I-N, not the other kind of flapping one. Languages that typically sort of emerge when there are two different languages, maybe an official language and a language of the people type situation, and they develop these kind of simplified languages that maybe borrow words from both of them and just allow you to express kind of basic kinds of things. It's kind of the basic, go into a coffee shop and make basic small talk type language. Well, the Toki Pona is a constructed one of these with only 130 words in it. And it's interesting that you can get away with only 130 words and be able to express anything reasonable. It is, I would say, somewhat amusing that the words are not based on English roots. They're based on roots from all kinds of languages, including languages like Finnish, that have totally different word origins, which makes it much harder to understand. Why is it, Soweli is a land animal and Lili is little and Pona is good, I think. And so, what is it? Soweli, Lili, Li, Pona or something means, little land animals are little creatures are good or something like that. Those words sound really weird because they have roots that are so very unfamiliar from English, and it would be, but the very fact that it's possible to make a language that expresses sort of everyday thoughts in so few words is interesting, and happens to be interesting to me right now because I'm thinking about kind of what is it that things like ChatGPT have really learnt? What is this thing that we put together that is language and is something that makes sense linguistically, and how many components, how many puzzle pieces really are there in doing that? That's a kind of coming attraction thing that I've been thinking about. But so it was, a language with 130 words, it doesn't take very long to learn it. I admit that I'm only about halfway through learning it. So I know about half the vocabulary, which is kind of pathetic, but, and there are things you can say and there are things you can't say with half the vocabulary. But, and I'm just going to be interested and curious in my own, I don't know how, I don't know whether I learn this quickly or not. I just haven't really learned languages in a long time. I would say that the thing I've long wanted to have a spoken version of Wolfram language, and I've never figured out how to do it. And it's kind of, when you end up dictating code, it's like, map F over the list, blah, 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 blah. And you do have ways to say it, but somehow it doesn't flow that well. And I've really wanted to find a way to be able to add little particles and particles of language particles into sequences that represent a comma with some kind of particle type thing, and be able to have something where there is a spoken version of the language, which maybe is not directly the sort of character for character dictation of what you would see in the written form, just as it isn't in many human languages, but is something where it's pretty easy for somebody, if you hear the thing spoken, to be able to understand it. See, one thing about most computer languages and our computational language is they have tree-structured grammars. So things nest, but that's the same as what happens in human language. But somehow we have a much easier time decoding, the cat which sat on the mat, which was this, which was this, which was this, pop up to the top again, chased the mouse. We have an easy time dealing with those subclauses and decoding them. The spoken form of Wolfram language that I've ever been able to figure out hasn't had an easy time understanding those subclauses. But I think it's going to be possible to have a spoken version, and I think that will be interesting as a way to, I think that will create another kind of way to relate to engage with kind of this computational language. Anyway, just a thing like that. So Callie asks, do you recommend encouraging exposing children to a second language when they're young? Is it harder to learn another language as you get older? I don't know. I know with my kids, who are now kind of grown up.
Rough game.
I did have this theory at the beginning.
Submit a question for future Q&A. Fill out a form, dog.
These things that have all the different phonemes of the world, because that way they're kind of learn, all these different phonemes that if you speak English, I don't know most.
I don't give a shit what Hassan was talking about.
I remember correctly, and there's a lot you don't know. There's a lot of sounds that we don't. The typical English speaker, depends on your accent. Typical English speaker doesn't make, it's always been said it's hard to learn those things later in life. I don't think that's true anymore. I think it was hard to learn when you couldn't just look at the waveform of what you speak, and I think it became a lot easier to learn. I think it became that was something which was kind of a long ago. People said if you don't learn those sounds when you're less than 5 years old or something, you're never going to learn them. I don't think that's true anymore. I haven't tried myself, but I don't think it's true. I think that being able to have this feedback that is a detailed kind of feedback that comes from just looking at the actual audio waveform and so on gives you that capability. So that's not if you didn't learn it when you were very young, it's too late type story. I think it's my impression that it's one of these typical things. You try and teach a kid 3 languages from day zero, and the time for them to learn any language is going to be longer. Is my impression. Anecdotally, I don't know. I'm sure there are. In fact, I even think I've seen studies of sort of multilingual acquisition. I suppose it's also interesting for kids when you get this sort of languages which are embedded in very different cultures. That's again its own interesting thing. I don't think I have really a good intuition.
I didn't see Bishop takes H6 for.
Is it great?
One more move. I was so ready to pull the trigger.
Is it better to learn one solidly and then go on and learn another one? I don't really know. I think it's an interesting question about education in general. One of the things that I suppose is
not sure what blender you're talking about.
Sort of reminds one of the following thing, that when you eat food, you could say, how come you can eat just a few foods and you somehow get all of the nourishment you need? Well, it's because foods are made of proteins and amino acids and so on, and you can have a hamburger, or you can have a finely presented, whatever it is, fish thingy dingy or something, you'll ultimately get the same amino acids in you. And so the question for education is, as you're learning different kinds of things, as you're learning different kinds of content, are there sort of blocks of cognitive sort of learning that you do that are sort of the same across these different domains? One thing that isn't the same is just outright facts. And the world is full of facts that are worth knowing.
I missed
and,
this.
That's obviously something that you have to separately learn in different areas. But I think there are some sort of meta-learning kinds of things. Like, for example, one thing is learning how to do a project. Okay, you do a project and it's a history project. You do a project and it's a technology project of some kind. I think there's a certain amount that you learn just at the meta level of doing a project, or doing a project deeply. Somebody does a PhD thesis about something, and it's about one thing or it's about another thing. There's a certain amount of meta learning of how to explore a subject to great depth that hopefully that is transcends the details of what the actual subject was. And I think that so that kind of makes it is it better to learn the one language really deeply and then add on the others, and because you're
Disaster.
always going to get the same sort of cognitive blocks, whatever you do, and there's extra that you get by learning the thing more deeply that you wouldn't get if you just learned three things more in a more shallow fashion. I'm not sure. I mean, it is my impression
No more Sheryl
that,
Sandberg.
For example, people learn the idea of starting from an idea and building it into something. Some people don't learn that ever, but if you can learn that, that's an important sort
I
of
was so
meta-learning
hungry.
kind of
I hadn't
thing.
eaten all
Another
day.
thing is, learning to think about stuff, learning, what it takes to, there's one thing is to remember what it said in a book and, be able to sort of reproduce some pattern of thought that was fed from a book, so to speak. It's another thing if there is no book, it's like, we don't know what to do. Can we figure it out? And that's a completely different, it's a different kind of different activity, is figure out stuff where it hasn't been figured out before, and where, sometimes you get into situations where people are like, you're saying, in fact, I was just in one of these this very morning, of something which we're doing, where I was saying to the people, look, nobody has done something like this before. There's no roadmap. We don't know what to do. We have to figure it out from scratch. And that's something that the concept of doing that and the ability to do that and the kind of pacing of doing something like that is a meta thing to learn that is probably independent of, once you've done that, even once actually, and seen it work out, it's a great experience. But it's something which is kind of like, really, you can actually go from nothing and make something and just figure stuff out? Well, yes, you can, but you kind of have to learn how to think about how to do that, I think. And I suppose so, I mean, there are these, in the subject of how to learn how to think, I was trying to figure out, and maybe I should think harder about this problem about how to teach how to think. But it's kind of like, what exercises can you give that kind of help the process of learning how to think about things? And, there are a few obvious ones, like, okay, somebody tells you a fact, claim fact. It's like, why is that true? Let's figure out, why is that true? Do you actually know it's true? How do you drill down? Where does it go as you try and get down to the bedrock of, is this actually true? And how would you find out if it's true? And what was the evidence that it was true? And kind of the experience of seeing that, and sometimes realizing, well, actually, gosh, you can't really actually tell if this is true. People claim it's true, but you don't really know in the end. And that's that's one type of thing. Another type of thing would be, here's a topic. What's a question you could ask about this topic that is, that interests you, or that is kind of, what's the thing about this? You've been told a certain set of things. What's the stuff you haven't been told? What's the stuff that you could have been told, but gosh, nobody knows that, so they didn't tell you that? Where are the holes, so to speak? That's another type of thing. I mean, another, I suppose, there are plenty of situations where I would say perhaps some of the things that involve explaining stuff is also a pretty good way to learn to think about things. It's like, okay, you've got this thing, maybe it's something you understand quite well, or you think you understand it quite well. How would you actually explain that? What's the main point? Try and drill down to the point where you can actually explain the thing without in the minimal way, so to speak. I think that has a certain, in thinking about things, that's often something you have to do. You have to say, well, I've got this big fuzzy thing, and if it's only the big fuzzy thing that I have, I can't think about that thing, because it's kind of like I can't fit this thing together with this other thing over here because they're big fuzzy things. But if you drill it down and you find the essence of the thing, then, well, yes, you can understand how it connects with these other things over here, and so on. I mean, I suppose one of the things that I'm wondering if there's some of the things that end up being really useful in thinking about things and figuring things out are these kind of analogies where you have learnt one field quite well, and you can see in that one field the kind of the features that exist there that you can kind of map into other things. So, for example, in physics, there are, particularly this is true from things that have come from our physics project about sort of things about the way that physics works with gravity and space-time and all that kind of thing. And then you can kind of see, once you understand that deeply, you can start seeing analogies in all these other places. And that's kind of an interesting sort of, can you think, what is the analogy between this and that? Or another thing, another example of that's pretty good is the history analogy kind of exercise, I suppose, which is, history has this terrible habit of repeating itself, but not precisely the same. It's like, where have we seen before? Let me give you an example from right now. People are saying, take ChatGPT. It's, people have kind of made this very big large language model and cost a lot of money to make. And maybe there'll be billion-dollar large language models that people make. I think there probably already are. And somebody's going to spend $1 billion to make this thing that is then something that can have a lot of uses made of it. And the question is kind of, okay, so figure out the analogy. Where have we seen something like that before, where people kind of, where you had to invest a lot to get this thing that you could then sort of make use of, and you start thinking about, I don't know, mining companies and things like that, where you're gonna find and excavate set up a gold mine.
Good afternoon. My name is Dave, and I will be your conference operator
Hi,
today.
Dave.
At this time, I would like to welcome everyone to the Meta fourth quarter and full year 2022 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session.
Mark
If you would
just
like to
slapped
ask a
Dave like
question,
this.
please press the 1, then the number 4 on your telephone keypad. This call
Hurry
will be
up, Dave.
recorded. Thank you very much. Ms. Deborah Crawford, Meta's Vice President of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta Platforms' fourth quarter 2022 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Javier Olivan, COO, is also on the call and will join Mark and Susan for the Q&A portion. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we may present both GAAP and non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
All right. Hey, everyone, and thanks for joining us today. 2022 was a challenging year, but I think we ended it having made good progress on our main priorities and setting ourselves up to deliver better results this year, as long as we keep pushing on efficiency. And I said last quarter that I thought our product trends look better than most of the commentary out there suggests, and I think that's even more the case now. We reach more than 3.7 billion people monthly across our family of apps. On Facebook, we now reach 2 billion daily actives and almost 3 billion monthly. The number of people daily using Facebook, Instagram, and WhatsApp is the highest it's ever been. Now, before getting into our product priorities, I want to discuss my management theme for 2023, which is the year of efficiency. We closed last year with some difficult layoffs and restructuring some teams, and when we did this, I said clearly that this was the beginning of our focus on efficiency and not the end. And since then, we've taken some additional steps, like working with our infrastructure team on how to deliver our roadmap while spending less on capital.
You never want your tech company to be focused on efficiency instead of growth.
Our org structure and removing some layers of middle management to make decisions faster, as well as deploying AI tools to help our engineers be more productive. As part of this, we're going to be more proactive about cutting projects that aren't performing or may no longer be as crucial, but my main focus is on increasing the efficiency of how we execute our top priorities. So I think that there's going to be some more that we can do to improve our productivity, speed, and cost structure, and by working on this over a sustained period, I think we'll both build a stronger technology company and become more profitable. I'm very focused on doing this in a way that helps us build better products, and because of that, even if our business outperforms our goals, this will stay our management theme for the year, since I think it's going to make us a better company. Now, at the same time, I'm also focused on delivering better financial results than what we've reported recently, and on meeting the expectation that I outlined last year of delivering compounding earnings growth even while investing aggressively in future technology. Now, next, I want to give some updates on our priority areas. Our priorities haven't changed since last year. The two major technological waves driving our roadmap are AI today and over the longer term, the metaverse. So first, let's talk about our AI discovery engine. Facebook and Instagram are shifting from being organized solely around people and accounts you follow to increasingly showing more relevant content recommended by our AI systems. And this covers every content format, which is something that makes our services unique. But we're especially focused on short-form video since Reels is growing so quickly. And I'm really proud of our progress here. Reels plays across Facebook and Instagram have more than doubled over the last year, while the social component of people resharing Reels has grown even faster and has more than doubled on both apps in just the last 6 months. The next bottleneck that we're focused on to continue growing Reels is improving monetization efficiency, or the revenue that's generated per minute of Reels watched. Currently, the monetization efficiency of Reels is much less than Feed. So the more that Reels grows, even though it adds engagement to the system overall, it takes some time away from Feed and we actually lose money. But people want to see more Reels, though. So the key to unlocking that is improving our monetization efficiency so that way we can show more Reels without losing increasing amounts of money. We're making progress here, and our monetization efficiency on Facebook has doubled in the past 6 months. In terms of the revenue headwind, we're still on track to be roughly neutral by the end of this year or maybe early next year. And then after that, we should be able to profitably grow Reels while keeping up with the demand that we see. In our broader ads business, we're continuing to invest in AI, and we're seeing our efforts pay off here. In the last quarter, advertisers saw over 20% more conversions than in the year before, and combined with a declining cost per acquisition, this has resulted in higher returns on ad spend. We continue to be excited about the monetization opportunity with business messaging too. Facebook and Instagram are the first two pillars of our business, and in the next few years, we hope to bring messaging online as the next pillar. One way of doing this is click-to-message ads, which is now at a $10 billion run rate. And paid messaging is the other piece of this. We're earlier here, but we continue to onboard more businesses to the WhatsApp business platform where they can answer customer questions, send updates, and sell directly in chat. So for example, Air France started using WhatsApp to share boarding passes and other information, other flight information in 22 countries and 4 languages. And businesses often tell us that more people open their messages and they get better results on WhatsApp than other channels. AI, it's the foundation of our discovery engine and our ads business. And we also think that it's going to enable many new products and additional transformations in our apps. Generative AI is an extremely exciting new area with so many different applications. And one of my goals for Meta is to build on our research to become a leader in generative AI in addition to our leading work in recommendation AI. So the last area that I want to talk about is the metaverse. We shipped Quest Pro at the end of last year. I'm really proud of it. It's the first mainstream mixed reality device, and we are setting the standard for the industry with our Meta reality system. Now, as always, the reason why we're focused on building these platforms is to deliver better social experiences than what's possible today on phones. And the value of MR is that you can experience the immersion and presence of VR while still being grounded in the physical world around you. We're already seeing developers build out some impressive new experiences like Nanome for 3D modeling, Molecules and drug development, Arkio for architects and designers to create interiors, and of course a lot of great games. The MR ecosystem is relatively new, but I think it's going to grow a lot over the next few years. Later this year, we're going to launch our next generation consumer headset, which will feature Meta reality as well. And I expect that this is going to establish this technology as the baseline for all headsets going forward, and eventually, of course, for AR glasses as well. Beyond MR, the broader VR ecosystem continues growing. There are now over 200 apps on our VR devices that have made more than $1 million in revenue. We're also continuing to make progress with avatars. We just launched avatars on WhatsApp last quarter, and more than 100 million people have already created avatars in the app. And of those, about 1 in 5 are using their avatar as their WhatsApp profile photo. And I thought that was an interesting example of how the family of apps and metaverse visions come together. Because even though most of our Reality Labs investment is going towards future computing platforms, glasses, headsets, and the software to run them, as the technology develops, most people are going to experience the metaverse for the first time on phones and start building up their digital identities across our apps. All right, so those are the areas we're focused on: AI, including our discovery engine, ads, business messaging, and increasingly generative AI, and the future platforms for the metaverse. And from an operating perspective, we are focused on efficiency and continuing to streamline the company so we can execute these priorities as well as possible and build a better company while improving our business performance. And as always, I'm grateful to our teams for your work on all of these important areas, and to all of you for being on this journey with us. And now over to Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis unless otherwise noted. Q4 total revenue was $32.2 billion, down 4% or up 2% year-over-year on a constant currency basis. Had foreign exchange rates remained constant with Q4 of last year, total revenue would have been approximately $2 billion higher. Q4 total expenses were $25.8 billion, up 22% compared to last year. In terms of the specific line items, cost of revenue increased 31%, driven mostly by a write-down of certain data center assets, as well as growth in infrastructure-related costs. R&D increased 39%, marketing and sales increased 4%, and G&A decreased 7%. Operating lease impairments and employee-related costs were the largest contributors to growth for all 3 expense lines. However, growth in marketing and sales was partially offset by lower marketing spend, and growth in G&A was more than fully offset by a decrease in legal-related expenses. We ended the fourth quarter with over 86,400 employees. which includes a substantial majority of the approximately 11,000 employees impacted by our previously announced layoff, who remained on payroll as of December 31st due to applicable legal requirements. We expect the vast majority of the impacted employees will no longer be captured in our reported headcount figures by the end of the first quarter of 2023. Fourth quarter operating income was $6.4 billion, representing a 20% operating margin. Our tax rate for the quarter was 24%. Net income was $4.7 billion, or $1.76 per share. Capital expenditures, including principal payments on finance leases, were $9.2 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $5.3 billion, and we ended the year with $40.7 billion in cash and marketable securities. In the fourth quarter, we repurchased $6.9 billion of our Class A common stock, bringing our total share repurchases for the full year to $27.9 billion. We had $10.9 billion remaining on our prior authorization as of December 31st, and today we announced a $40 billion increase in our stock repurchase authorization. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow. We estimate that approximately 2.96 billion people used at least one of our Family of Apps on a daily basis in December, and that approximately 3.74 billion people used at least one on a monthly basis. Facebook continues to grow globally and engagement remains strong. We reached 2 billion Facebook daily active users for the first time in December, up 4% or 71 million compared to last year. DAUs represented approximately 67% of the 2.96 billion monthly active users in December. MAUs grew by 51 million or 2% compared to last year. Q4 total Family of Apps revenue was $31.4 billion, down 4% year over year. Q4 Family of Apps ad revenue was $31.3 billion, down 4%, but up 2% on a constant currency basis. Consistent with our expectations, Q4 revenue remained under pressure from weak advertising demand, which we believe continues to be impacted by the uncertain and volatile macroeconomic landscape. The financial services and technology verticals were the largest negative contributors to the year-over-year decline in Q4, but both have relatively smaller shares of our revenue. Growth remained negative in our largest verticals, online commerce and CPG, though the pace of year-over-year decline in online commerce has slowed compared to last quarter. The largest positive contributors to year-over-year growth in Q4 were the travel and healthcare verticals, though both are relatively smaller verticals in absolute share. Foreign currency remained a significant headwind to advertising revenue growth in all international regions. On a user geography basis, ad revenue growth was strongest in rest of world at 5%. North America was flat, while Asia Pacific and Europe declined 3% and 16% respectively. In Q4, the total number of ad impressions served across our services increased 23%, and the average price per ad decreased 22%. Impression growth was primarily driven by the Asia Pacific and rest of world regions. The year-over-year decline in pricing was primarily driven by strong impression growth, especially from lower monetizing surfaces and regions, lower advertiser demand, and foreign currency depreciation. While overall pricing remains under pressure from these factors, we have continued to make improvements to our ads targeting and measurement that we believe are driving more conversions and better returns for advertisers. Family of Apps other revenue was $184 million in Q4, up 19%, with strong business messaging revenue growth from our WhatsApp business platform, partially offset by a decline in other line items. We continue to direct the majority of our investments towards the development and operation of our Family of Apps. In Q4, Family of Apps expenses were $20.8 billion, representing 81% of our overall expenses. Family of Apps expenses were up 23% due primarily to restructuring related expenses and growth in infrastructure related costs. Family of Apps operating income was $10.7 billion, representing a 34% operating margin. Within our Reality Labs segment, Q4 revenue was $727 million, down 17% due to lower Quest 2 sales. Reality Labs expenses were $5 billion, up 20% due primarily to employee-related costs and restructuring-related expenses. Reality Labs operating loss was $4.3 billion. Before turning to the outlook, I'd like to discuss our work to grow profitability by scaling monetization and improving our operational efficiency. There are two primary levers to increasing monetization: growing supply and growing demand. Growing ad supply gives businesses more opportunities to get in front of people, and we are focused on enabling that in a couple of ways. First and foremost, we remain focused on building engaging experiences for the people who use our apps. We are coming into 2023 with a strong foundation as Reels continues to scale, and we're seeing in-feed recommendations contribute to engagement as we help people discover new content in their feeds. We will continue to invest in making these experiences best in class. The other side of growing supply comes from more effectively monetizing the surfaces within our apps, including those that have a lower level of ads today. In the nearer term, ramping Reels monetization remains a primary focus. Over the longer term, we see opportunities to continue improving Facebook and Instagram monetization while also scaling revenue contributions from our messaging platforms. Growing advertiser demand is the other focus, and a big effort here is around continuing to drive advertiser performance. While we're still contending with the broader macro uncertainty and signals landscape weighing on advertiser demand in the near term, we're making good progress on our roadmap and are already seeing improvements to ad performance and measurement from the investments we've made. We see opportunities for continued gains in the near and medium term, with our AI investments powering a lot of this work as we continue to improve ads ranking and enable increased automation for advertisers to make it easier for them to run campaigns and use our systems to optimize their performance. Another opportunity we have is to further scale on-site conversions through products like click-to-message, lead ads, and shop ads. Click-to-message ads continue to grow quickly, and we believe they're bringing incremental demand onto our platform, with over half of click-to-message advertisers exclusively using click-to-messaging ads on our platform. We see further opportunity as we continue to scale click-to-WhatsApp ads and are investing in growing newer formats like shop ads. Over the long term, we're investing heavily in AI to develop and deploy privacy-enhancing technologies and continue building new tools that will make it easier for advertisers to create and deliver more relevant and engaging ads. Moving now to our efficiency work. We took significant actions in 2022 to operate more efficiently. In Q4, we made the difficult decision to lay off employees while deprioritizing certain projects and curtailing non-headcount related expenses. We've applied the same scrutiny to our physical assets. We identified opportunities to consolidate our office facilities, and we have streamlined our future data centers to a new architecture, which we believe will be more cost efficient and more flexible, that provides us optionality to support both AI and non-AI workloads. In Q4, we recorded $4.2 billion of total restructuring costs in connection with all of these efforts, and expect there to be some additional costs in 2023 in areas like office facilities impairments as we continue this work. As Mark has said, these actions are just the beginning of our efficiency efforts, and we remain keenly focused on this in 2023. We are working across the company to deprioritize lower ROI work, move faster, increase productivity, and reduce costs across the business. As part of this, we are carefully scrutinizing our hiring needs, actively reevaluating projects, and reducing management layers. I'm confident that our company-wide focus on efficiency will position us to be an even more productive organization going forward. Turning now to the revenue outlook. We expect first quarter 2023 total revenue to be in the range of $26 to $28.5 billion. Our guidance assumes foreign currency will be an approximately 2% headwind to year-over-year total revenue growth in the first quarter, based on current exchange rates. Turning now to the expense outlook. We anticipate our full year 2023 total expenses will be in the range of $89 to $95 billion, lowered from our prior outlook of $94 to $100 billion due to slower anticipated growth in payroll expenses and cost of revenue. We now expect to record an estimated $1 billion in restructuring charges in 2023 related to consolidating our office facilities footprint. This is down from our prior estimate of $2 billion, as we recorded a portion of the charges in the fourth quarter of 2022. We may incur additional restructuring charges as we progress further in our efficiency efforts. Turning now to the CapEx outlook for 2023. We expect capital expenditures to be in the range of $30 to $33 billion, lowered from our prior estimate of $34 to $37 billion. The reduced outlook reflects our updated plans for lower data center construction spend in 2023 as we shift to a new data center architecture that is more cost efficient and can support both AI and non-AI workloads. Substantially all of our capital expenditures continue to support the family of apps. On to tax. Absent any changes to U.S. tax law, we expect our full year 2023 tax rate percentage to be in the low 20s. In addition, as noted on previous calls, we continue to monitor developments regarding the viability of transatlantic data transfers and their potential impact on our European operations. In closing, 2022 was a challenging but pivotal year for our business. We made important progress on our priorities and have taken significant steps to improve our efficiency and productivity. We are set up well to build on this work in 2023 as we continue investing for future growth, while remaining focused on delivering strong financial performance. With that, Dave, let's open up the call for questions.
Let's go.
Thank you. We will now open the lines for a question and answer session. To ask a question, press 1 followed by the number 4 on your touch-tone phone. Please pick up your headset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. Your first question comes from the line of Brian Novak with Morgan Stanley. Your line is open.
Great. Thanks for taking my questions. I have two, one for Mark, one for Susan. Mark, the first one's on generative AI. Sort of wanted to dig a little more into how you think about, your blue sky potential user and advertiser use cases of generative AI, and how do you think about the timeline from when we can first see some glimpses of those on the platform? And then the second one for Susan, just any more color on the new data center architecture and how we should think about the long-term capital intensity of the business, whether it's CapEx per minute, CapEx per DAU. How big of a long-term benefit could this change be to the overall cash flow? Thanks.
Yeah, I can start with generative AI. I think this is a really exciting area. And I'd say, the two biggest themes that, focused on for this year, and one is efficiency, and then the kind of the new product area is going to be the generative AI work. We have a bunch of different work streams across almost every single one of our products to use the new technologies, especially the large language models and diffusion models for generating images and videos and avatars and 3D assets and all kinds of different stuff across all the different work streams that we're working on. As well as over the long term, working on things that could really empower creators to be way more productive and creative across the apps and run a lot of different accounts. So I think there's some really exciting stuff here. I want to be careful not to kind of get too far ahead of the development of it. So I think you'll see us launch a number of different things this year, and we'll talk about them, and we'll share updates on how they're doing. I do expect that the space will move quickly. I think we'll learn a lot about what works and what doesn't. A lot of the stuff is expensive, right, to kind of generate an image or a video or a chat interaction. These things we're talking about, like cents or fraction of a cent. So one of the big interesting challenges here also is going to be how do we scale this and make this work more efficient so we can bring it to a much larger user base. But I think once we do that, there are going to be a number of very exciting use cases. I realize this is a pretty high level answer for now, but I think that we'll be able to share more details over the coming months.
Thanks, Brian. On your questions about CapEx, so your first question was about the new data center architecture that we talked about, which is underpinning the lowered CapEx outlook. So we're shifting our data centers to a new architecture that can more efficiently support both AI and non-AI workloads. And that's going to give us more optionality as we better understand our demand for AI over time. Additionally, we're expecting that the new design will be cheaper and faster to build than previous data center architecture. Along with the new data center architecture, we're going to optimize our approach to building data centers. So we have a new phased approach that allows us to build base plans with less initial capacity and less initial capital outlay, but then flex up future capacity quickly if needed. We're still planning to grow AI capacity significantly, and that connects, I think, to a lot of the things that Mark was describing earlier in his question. In terms of longer run capital intensity, we certainly expect that the lower CapEx outlook will have some incremental benefit to CapEx as a % of revenue, and that's still really something that we are focused on over the longer term. The current surge in CapEx is really due to the building out of AI infrastructure, which we really began last year and are continuing into this year. We'll be measuring the ROI of these AI investments, and their returns will continue to inform our future spend. Our intention is still to bring CapEx as a % of revenue down, but capital intensity in the nearest term is really going to depend in part on the revenue outlook and our needs to further build AI capacity for future demand.
Your next question comes from the line of Eric Sheridan with Goldman Sachs.
Hey,
Your line
Eric.
is open.
Thank you so much. Maybe I can ask a multi-parter on coming back to some of your comments on Reels. Mark, you've always had this philosophy of letting the user sort of continue to grow engagement, and monetization has always lagged sort of consumer adoption of new products. How do you think about going a little bit deeper on the mixture of letting the engagement of short-form video continue to build versus eventually sort of continuing to drive higher levels of monetization against that product? Second, can you give us a little bit of color of how advertiser conversations continue to evolve around short-form video and the adoption of the canvas and the utilization of that as a means to deliver a mixture of brand and DR messages? And then lastly would just be, can you quantify at all the gap that still exists between the engagement around short-form video and the monetization, and how that might close as we look out over the next couple of years? Thanks so much.
Yeah, the way I've always looked at this, I can take the first part of this, is that for these consumer products, often building up and scaling the product use case is a somewhat different discipline than working on the monetization. So it's such a kind of hard problem to build these new types of products that you want to give the teams as much clarity and as simple of goals as possible. So in the beginning, just saying, okay, just let's make something that works for people. And then, once we get to many hundreds of millions of people or billions of people using it, then we'll focus on ramping up the monetization, which has been a formula that's worked for us. That's the general approach. Now with Reels, we do have a lot of people using it now. So I think at this point, the question is there any strategic advantage to letting it scale further than would be profitable to do? And I think at the scale that it's at right now, it's not clear that there's much strategic advantage. There are certain flywheels, and you get certain more feedback or data points from a little bit more distribution. But at this point, we're at pretty good scale. So I think for now, the right thing to do is to work on monetization efficiency. And we know that there is demand to see some more Reels. And as we naturally improve the monetization efficiency, which I have confidence in because the teams are doing good work and that's been working. I shared the stat about it, the efficiency doubling over the last 6 months on Facebook. I think as we can continue some of those trends, then we'll naturally just unlock the ability to show more and more Reels, and it will continue to grow from there. But that's the overall approach. I do think that our philosophy of building these consumer products, focusing on getting them to hundreds of millions or billions of people, and then focusing on monetization beyond that and bringing that in as the balance is the right approach. It's served us well. You can expect us to continue doing that on future things that we do, including some, hopefully some of the new generative AI products or some of the new metaverse stuff that we're doing. We're going to take the same approach there as well.
So on the advertisers' reaction to Reels, we continue working on enabling more advertisers to participate in Reels ads. more formats, more objectives, more tools to create them, and we've been making good progress. Indeed, now over 40% of our advertisers use Reels ads across our apps. And between direct response versus brand, we're actually seeing progress with both. But direct response continues to be where advertisers are focused. And this is an example. Outlet City, which is a German fashion retailer, developed creative specifically for Reels to test its impact on conversions. And they found that Reels resulted in a 19x higher ROAS, 89% lower cost per purchase, and 9 times higher lift in sales. So overall, very good results.
On your third question, Eric, we are not quantifying the gap in monetization efficiency between Reels and other services. We know it, took us several years to bring the gap close between stories and feed ads, and we expect that this will take longer for Reels. Having said that, we are still roughly on track to bring the overall Reels revenue headwind to a neutral place by the end of this year or early next year, and we're planning to do that through both improving Reels monetization efficiency and growing incremental engagement from Reels.
Your next question comes from the line of Mark Shmulik with Bernstein. Your line is open.
Yes, thanks for taking the questions. I've got a couple as well. The first one I don't know for Susan or Javier. As we think about, I appreciate the color on improving conversion rates. Would it be fair to say that you're kind of through the other side of some of those IDFA headwinds we've been talking about for the last year or so? And any more color, just kind of that journey of the AI-driven ad engine would be appreciated. And secondly, Mark, kind of diving into that annual theme of efficiency and following on Buz's post, what's the right way to think about long-term investment intensity in Reality Labs? And kind of balancing that with the ambitions to build the next computing platform. Is this the right intensity of kind of where you're at right now to think about, or are there any milestones we should be looking for? Thanks.
Thanks, Mark. So on your first question, we are continuing to make progress in mitigating the impact from the ATT change. But, this is more generally just the reality of the online advertising environment that we operate in now. So, we're continuing to work on building tools that mitigate the impact of those changes, and we see strong adoption of those tools, including tools we've talked about before, like CAPI Gateway, et cetera. We're also investing in ways to bring conversions on site, and we have a lot of ad formats that have been instrumental in doing so across both click-to-messaging ads, lead ads, and shop ads being, formats that bring conversions on site. And then over the longer run, we're continuing to invest in our privacy-enhancing technologies to more fundamentally enable us to deliver more performant and privacy-safe ads to advertisers. Javi, is there anything you want to add on that?
I think, Susan, you touched on most of it. I think if you look at the strategy on ads, it really has two parts, which is continue investing in AI, and that's where we're seeing a lot of the improvement in ads relevance. And as Mark was saying, we saw over 20% more conversions than in the prior year, which combined with the decline in cost per acquisition results on higher ROAS. We also used it for automated experiences for the advertisers, improvements on measurement, which allow advertisers to do better budget decisions. But the second part is bringing more conversions on site, which are also obviously helping offsetting this signal loss. Indeed, we're reframing the problem as a signal growth opportunity. And one example would be lead ads, where just to give another example, Iris, which is an online marketing and sales automation agency in Italy for hotels and resorts, they use these ads to collect a higher volume of qualified leads at a lower cost. So basically, compared to off-site leads, sending the leads off-site, they managed to achieve a 2x more final bookings with on-site leads, 4x more qualified leads with on-site leads, and a 2.7x lower cost per lead with on-site versus the alternative of sending the lead acquisition off-site.
All right, I can give some color on, and I think there was a question about how we're thinking about this efficiency theme as it applies to Reality Labs over time. I guess that there were two ways that I think this applies. The first thing is I think it's important to not just think about Reality Labs as one thing, right? There are like three major areas, right? There's the augmented reality work long term, which is actually the biggest area, but is still a large research problem. There is a lot of work there that and we haven't actually shipped the product yet. VR, which is starting to ramp, right? Quest 2, I think, did quite well. We have multiple product lines there with the Quest Pro. And then the smallest by kind of budget size today is the Metaverse Software Program. And, it doesn't reflect the importance of it. I think, the software and social platform might be the most critical part of what we're doing, but software is just a lot less capital intensive to build than the hardware. So it's the smallest part of the program. And within each of those areas, there are a lot of different things that we're doing. So, just like any project that we would run, we're constantly learning from how the products that we've shipped are doing, how the market is evolving overall, how competitors are doing, and what reaction they're seeing to different things, and what experiments are being played out, and we're kind of constantly tuning the roadmap. And obviously some of these are longer term things, right? So you start planning out the hardware that you're going to ship, 2-3 years in advance. But we're kind of constantly looking at the signals and learning and making decisions about what it makes sense to do forward. So that's definitely going to continue. And we will, even though none of the signals that I've seen so far suggest that we should shift the Reality Labs strategy long term. We are constantly adjusting the specifics of how we of how we execute this. So I think we'll certainly look at that as part of the ongoing efficiency work. The other piece is just different tactics, things like trying to flatten the org, things like that. Those are going to apply across the whole company. So we expect that within the roadmap that we're trying to execute, both on Reality Labs and Family of Apps, we just want to focus on making all of our work more efficient. A lot of the time when people talk about efficiency, there's a lot of focus on prioritization and which big things can you cut. But I actually think what makes you a better company over time is being able to execute and do more things because you're operating more efficiently and you can get things done with fewer resources. So I'd like to kind of get us to that mode more, which I guess gets me to a higher level point in this, which is I just think we've entered somewhat of a phase change for the company where we just grew so quickly for like the first 18 years of the company's growth. And it's very hard to really crank on efficiency while you're growing that quickly. And I just think we're in a different environment now where we have a bunch of areas that I think are still extremely exciting and growing quickly for the future, where I think the right strategy will be to focus on kind of top line growth. But I think a lot of what we do, it really just makes sense to really focus on the efficiency a lot more than we had previously and making sure that we can do that work more effectively. For what it's worth, I think if we do that well, I think we'll be able to do better product work, and I think it'll be a more fun place for people to work because I think they're going to get more stuff done. So I'm pretty committed to this, and it's going to go across all of the different things that we're doing.
Your next question comes from the line of Doug Anmuth with JP Morgan. Your line is open.
Great, thanks for taking the questions. Susan, I know the expense outlook came down by $5 billion. Just hoping you could talk about some of the areas where you may be able to get increased efficiency still, and then what does the new expense outlook suggest for hiring levels in 23? And then separately, I was hoping you could comment on the issues in Europe around Meta's use of first-party data to target ads. How could this get resolved, and how should we think about the risk to Meta? Thanks.
I'll start with the 2023 expense outlook. So the primary components of the reduction in the 2023 expense outlook are across three areas. The first is slower payroll growth. So we're continuing to scrutinize how we allocate resources across the company on this. We have a broad hiring freeze in place right now, and we continue to expect a slower pace of hiring in the year as we evaluate what roles we're going to open. I'll roll in the answer to your second question here, which is, this is an ongoing process for us. We don't presently have a hiring target to share for the end of the year. The second component of the lower expense outlook is on cost of revenue. We're expecting slower growth. Depreciation here is impacted by us extending the useful lives of non-AI servers in Q4. And then the third component is our outlook now reflects an estimated $1 billion in facilities consolidation charges. That's down from the prior $2 billion estimate that we gave in the last guidance range, since a portion of the previously estimated charges were already recognized in Q4 2022. So those are really the big, those are really the primary issues as it pertains to the lower expense outlook. Your second question was on the issues in Europe around Meta using data to target ads. So I think, I think if you're referring to the EU DPC ruling, that we have to change our approach regarding our reliance on contractual necessity as a legal basis for ads in Europe, that's a decision, we don't agree with it. We believe that our current approach is GDPR compliant, and we're appealing the substance of the rulings and the fines. We don't expect that those decisions are going to affect our ability to provide personalized advertising in the EU, and that advertisers should be able to continue to use our platforms to reach customers and grow their businesses.
Your next question comes from the line of Justin Post with Bank of America. Your line is open.
Great, thank you. Maybe a follow-up on the privacy and data use. Are you still facing headwinds in the first quarter, or are you kind of past that from IDFA or ATT? And then as you look out over the next year, anything on Android or in the EU with Digital Markets Act, or anything we should be thinking about or aware of? Thank you.
Thanks, Justin. On ATT, I think what I would say is there is still certainly an absolute headwind to our revenue number, that is the impact of the ATT changes being in place. Having said that, we are lapping its rollout and adoption, and we're making progress in mitigating the impact due to a lot of the work that both Javi and I just talked about, including the different advertiser tools, including ad formats that bring ad conversions on site, and including the longer term AI investments in privacy enhancing technologies. The second part of your question was on, anything from Android and other headwinds. On Android, it's too early to know where this will land. I think Google's taking a approach that is collaborating with the industry, which we think is critical, and we'll have updates as more time elapses there. And then the third part of your question, I think, was on regulatory issues in the EU. I think this was on DSA. We are expecting, we have been preparing for some time to comply with DSA and meet the compliance deadlines that we expect to come into effect this year. Those are, a meaningful but manageable segment of costs we've been preparing for a long time, and those costs have been factored already into our total expense guidance.
Your next question comes from the line of Youssef Squali with Truist. Your line is open.
Great, thank you. Two questions for me, please. First, maybe one for Susan. Just staying on the theme of the efficiency and with all the adjustments to your cost basis lately, can you maybe just speak to the relationship you're trying to build between revenue growth and OPEX, CAPEX growth over time? I think the last time we saw them move in tandem or close to each other was back in 2017. So are you at a point where you'd want them to grow much closer to each other, or are we still in investment mode and therefore potentially margin compression mode beyond just 2023? And then maybe Mark, can you just provide an update on kind of the health of the broad digital ad space, especially for the SMB side and DR? Just curious if, coming out of Q4, you're incrementally bullish, or you're still as cautious as, say, you were 3 or 6 months ago. Thank you.
First question. So, certainly the lower expense outlook and CapEx outlook puts us in a better position in terms of financial performance for this year. We are, I think, still, we're focused on the goal that Mark outlined, I think, last quarter of delivering compounding earnings growth while enabling aggressively in the future technology. And that continues to be the principle by which we're guiding our financial plans. The second question is on on the health of the broader digital ad space. I can start with this, and Javi, you should feel free to jump in if you want to add more color. Q4 for us, we saw that the holiday season for us fell mostly within our range of expectations. Trends in online commerce modestly improved for us, which is encouraging, but again, the growth was still negative year over year. So overall, I think this is still a pretty volatile macro environment. It's early in the year to know how this will shape up for 2023. And if there's anything, Javi, you'd like to add, you can jump in.
No, I think you covered it well, Susan.
Your next question will come from the line of Ron Josey with Citi. Your line is open.
Great, thanks for taking the question. Mark, I wanted to talk a little bit more around the progress on the AI discovery engine and Reels. And we're seeing it in our own usage in terms of content and categories and just getting more insights and content that we'd like to see. But can you just talk about the added signal that Meta is seeing and gaining here to produce this more relevant content across Reels to Stories to Feed and maybe even to Messenger? Thank you.
I'm not exactly sure what would be useful to share here, but in general, a lot of the gains that we're seeing on the discovery engine overall, which we basically use to refer to our AI recommendation system across Facebook and Instagram, across all different content types, of which Reels is sort of a special case, and that's growing the fastest with short form video. But a lot of this is, there's not like one specific data type that's useful. A lot of the trend that we're seeing here is we're using larger models, which require more computation. We've shifted the models from being more CPU-based to being GPU-based. We've seen big improvements in the amount of time and engagement that we've gotten, and we, it's a little bit hard for us to predict exactly how much we'll be able to continue tuning those and improving, but from the experience that we've had so far, I would bet that there's still pretty significant upside there. I know that you kind of asked about specific data points, but I think that that's really the theme that we're seeing, and that applies across Reels and the rest of the discovery engine. The one thing that I'd add, it's a little bit separate from your question, but we do spend most of the time talking about Reels, so maybe it's worth giving some color on the rest of the discovery engine work, which is has also been doing quite well and is much more incremental to the rest of the business, because if people end up being able to discover additional photos or links or groups or things like that in Facebook, or just interesting content across Instagram, then they're just more engaged in the product, and we already know how to monetize that content. So that ends up being really helpful, both for the overall engagement, not very cannibalistic at all, and already profitable. So we've spent less time talking about that because I get that Reels is sort of the faster growing area, but we do still expect that as a percent of the overall feeds in Facebook and Instagram, recommended content will continue growing. I don't know if it'll be a majority by the end of this year, but maybe it'll be 30%, 40%, something in that zone, and continuing to grow, because we can just find content that people are going to be interested in that may not be from accounts that they've followed directly. So hopefully that's some useful color on what we're seeing across those efforts.
Your next question comes from the line of John Blackledge with Cowen. Your line is open.
Great, thanks. Two questions. Just to follow up on Reality Labs. Should we continue to expect accelerating losses at Reality Labs in 23? And if so, should we expect Reality Labs to be at peak op losses this year? And then second, Susan mentioned shop ads in the bucket of early monetization. Just any color there on how we might see that scale this year. Thank you.
Yeah. Sorry, I'll go ahead and take the first question about Reality Labs, and Javi, you can take the second question on shop ads. On Reality Labs, we still expect our full year Reality Labs losses to increase in 2023, and we're going to continue to invest meaningfully in this area given the significant long-term opportunities that we see. It is a long duration investment, and our investments here are underpinned by, the accompanying need to drive overall operating profit growth while we're making these investments. I'll turn it to Javi on the shop ads.
Yeah, so in Q4, we continue to test shop ads in the U.S. We're seeing increased performance by helping direct a consumer to the place where they're most likely to purchase. So it's early to know, but we really finally saw product market fit in a test. It's of a small base, but to just give you a sense, we saw triple-digit growth in both revenue and adoption across Q4. And we expect this growth to normalize to a lower level in 2023. And the shop ads beta has a revenue run rate in the hundreds of millions of dollars. So that gives you, it's a small base, it's small revenue run rate yet, but it's growing rapidly, and we expect it to continue but normalize to more lower levels in 2023.
Your next question comes from the line of Mark Mahaney with Evercore ISI. Your line is.
Thanks. Two questions, please. That click-to-messaging at now that $10 billion revenue run rate, how do you think about the growth path for that going forwards? And do you find that that's bringing in brand new advertisers to Meta that you hadn't seen before? Like, who's coming in on that, and does that give you a new growth path? And then, Mark, if I could just ask you, this year of efficiency, this it's almost like there's been a journey going on since early last year when you talked about talking about driving the business for growing operating profit. And I guess I just want to ask the why question. I mean, it's, the markets obviously like what they're hearing from you today and the changes, but why the much greater focus on efficiency, not just tonight, but like kind of over the last, 9 or 12 months with maybe a few hiccups? Like, what is it, just the maturity of the business? Is it just trying to take an advantage of a crisis? But there is a crisis out there in terms of the economy, and maybe that forced minds to think this way. Just a little bit more color on the why. Thanks a lot.
Thanks. This is Susan. On the click-to-messaging ads, so this is one of our fastest growing ads products, and we believe that they're bringing incremental demand onto our platform. I mentioned in my script that over half of click-to-message advertisers exclusively use click-to-message ads on our platform. You asked how we're going to scale, and I think there are a couple dimensions. In terms of demand, I think the biggest piece here is getting more businesses to adopt, click-to-messaging ads via creating more entry points, simplifying creation flows. We're trying to integrate with partners who can help smaller businesses scale, so there's a lot of work going on there. On the performance side, we're continuing to focus on just driving up the ROI that advertisers get from click-to-messaging ads. We're trying to give advertisers the ability to do more down-funnel optimization, create better in-thread experiences, and simplify flows that help them drive conversion. And then ultimately, we're always focused on growing supply, and in this case, growing the business messaging ecosystem by creating more ways for people and businesses to connect across our messaging app. So I think an example of that would be something like business directory search on WhatsApp. So it's an opportunity we're very excited about, and we've invested a lot in, and we've seen very healthy growth. I'll turn it to Mark on the efficiency question.
Yeah, so I mean, on the efficiency point, I think we come to it from a few places. I mean, one is just like the journey of the company. And for the first 18 years, I think we grew it, 20%, 30% compound, or a lot more every year, right? And then obviously that changed very dramatically in 2022, where our revenue was negative for the growth for the first time in the company's history. So that was a pretty big step down. And we don't anticipate that that's going to continue, but I also don't think it's going to necessarily go back to the way it was before. So I do think this is a pretty rapid phase change there that I think just forced us to basically take a step back and say, okay, we can't just treat everything like it's hyper growth. There are going to be some areas that are going to be very rapidly growing, or that are very kind of future investments that we want to make, but we also have a lot of things now that are a lot of people using them and support large amounts of business, and that we think we should operate somewhat differently. So I think that there's that piece of it. But the other part of it that I'd say is that as we've started doing the work, I actually think it makes us better, right? And that was somewhat unexpected, right? I kind of historically would have thought that this would just occupy some amount of our mind space, and that would be more of a trade-off against how we are able to build products and get things done. But at this point, I'm actually fairly optimistic that there are a pretty good roadmap of things that we can do that will just make us more efficient and actually better able to build the things that we want. Not all of them will help save money, right? So for example, focusing on AI tools to help improve engineer productivity, it's not necessarily going to reduce costs, although over the long term, maybe it'll make it so we can have fewer, we just hire less, right, and stay a smaller company for longer. But I do think things like reducing layers of management just make it so information flows better through the company, and so you can make faster decisions. And I think ultimately that'll help us not only make better products, but I think it'll help us attract and retain the best people who want to work in a faster moving environment. And so I don't know, that honestly was a little bit surprising, right? That as we started digging into this, that the company would actually start to feel better to me. And I don't know how long that will, like how long the roadmap is of things that we can continue to do where that'll be the case. But I do think we have a good amount of things like that. So that's why I'm really focused on this now. And I do want to continue to emphasize the dual goals here of making the company a better technology company and increasing our profitability. They're both important, but I think it's also really important to focus on the first one of just making it a better company, because that way, even if we outperform our business goals this year, I just want to communicate, especially to people inside the company, that we're going to stick with this, because I think it's just going to make us a better company over the long term. So I think that's it for now.
Operator, we have time for one last question.
Thank you. That will come from the line of Brent Thill with Jefferies. Your line is open.
Thanks. Susan, for your Q1 guidance, can you just remind us all what your embedded expectations are for market conditions, how you think about seasonality, what's embedded in that guidance?
Thanks, Brent. For Q1, we are, our guidance range of 26 to 28.5 billion, corresponds to -7% to +2% year-over-year growth, and it reflects, a wide range of uncertainty given the continuation of the general macro environment that we've been operating in. Again, we are pleased with the core engagement trends that we've talked about and the performance improvements that we're delivering for advertisers with our monetization work and our investments in AI. And we expect FX to be less of a headwind to year-over-year growth in Q1 than it was in Q4. But again, we are keeping a close eye on advertising demand and on the ongoing macroeconomic volatility.
Great. Thank you for joining us today. We appreciate your time, and we look forward to speaking with you again.
This concludes today's conference call. Thank you for joining.
I don't know. I think this is some very encouraging guidance, but I'm not sure. Hey. Yeah, no, great call. I think you did great. No, the market loves it. I'm proud of you, Mark. Almost $200 a share again. No, that's huge. You want to do what? I don't know. I'm not an MMA guy. Well, last time you beat the crap out of me. I'm not doing that again. Yeah, I don't know. Ask Lex Friedman or someone. I don't know how to do that. Oh yeah. One more thing. Yeah, fix the Horizons World bullshit. That is anybody even using it? I don't know, bro. Yeah, I got a quest around here somewhere. I don't know. All right, I gotta run. Yep. No, good job. Get him again next